Good morning, everyone, and welcome to the 109th episode of the Veritas Fact-Finding Series. And today I'm joined by my very good friend, Flavio Volpe. Good morning, Flavio.
Morning.
In each episode of our fact-finding series, we go on the ground to speak to industry professionals in an unscripted, candid, live video format to discover how we can make better investment decisions. In this series, and with everything we do, we believe the facts empower investors, and that better information leads to better investment decisions. If you're watching and you like what you hear, give us a like and follow us at veritascorp.com. By way of background, my name is Anthony Scilipoti, and I'm the president and CEO of Veritas, which is an independent equity research firm based in Toronto, Canada. I'm proud to say this year we're going to celebrate 23 years being 100% employee-owned and operated. Quick disclaimer, this broadcast is not to be taken as investment advice, and participants or employees of the Veritas group of companies may own securities discussed in this broadcast. And while we love all our guests, and Flavio in particular, this session may contain forward-looking statements, investment opinions, and comments that we may not agree with at all. Now, I'd like to take a very quick moment to introduce Flavio to everybody. This is your third time with us, Flavio, and we have a lot of exciting things to talk about. But just quick background, I'm just going to make the comment that Flavio is the champion of Canadian Auto Workers Association. He serves as its president. But I would say is much more of a champion, and not just of the workers, but of all things related to Canadian automotive. The recent, I think, reached its pinnacle with the with the Project Arrow that was launched, and I'm really excited to hear what is in store, given that we have that now under our belt and what the next steps are. With all the moving parts, we're going to, I like to use that, nice. With all the things happening in the auto industry, we've seen, the shock from having to spend more on EV, and that's brought down the likes of Magna. It's brought down, there's been shocks even at Linamar in terms of what their earnings outlook's going to look like. There's uncertainty. We're seeing recently comments here with the lack of the federal budget pulling back, perhaps, on what's going on here with the plan in Windsor, and then there's the big plan out in St. Thomas. So there's lots to talk about. Flavio, how you doing?
I'm good. Thanks for having me back on. And yeah, there's a lot going on. This is my favorite show to come on, not because you were the coolest guy at high school. That was a long time ago for both of us. But that still carries that. I'll come on anytime you want.
All right, good. Just as a reminder, this is a live show, and so if you have questions, please go into your Q&A. I know Flavio has told me that no holds barred here. If you want to understand how he keeps his beard so nice, whatever you'd like to know, Flavio can help us out with understanding. Flavio, why don't we get started? Let's talk about this Project Arrow, what it means, how it came to be, and go through the details.
Sure. So Project Arrow is our fully operational zero emission vehicle, lightweight prototype. It is a prototype, not a rendering or a clay model or a semi-functional vehicle, because what we said was, for probably 8 or 9 years now, we've been doing, as the Auto Parts Manufacturers Association, demonstration projects of what are Canadian capabilities in advanced technology. We partnered for many years with Toyota Motor Manufacturing Canada, who makes great cars in Cambridge and Woodstock. They would give us cars like Ontario-made Lexus RX vehicles, and we'd put new technology on the vehicles and then use that rolling demo to go out and see other OEMs. We brought that fleet of Lexuses around the world, and right before the world fell apart, we said, what's the next? So we started with one car was non-rolling, then the second one was rolling, and then we had a fleet going in partnership with the city of Stratford. How are we going to highlight Canadian capabilities around the world when there isn't a Canadian car company? How are we going to highlight the fact that we can do everything bumper to bumper? So we said, why don't we just make a car? Now, it sounds easy now because we did it. But what we said was, I'll raise the capital. We'll do it from our partners, the part suppliers, and then see what the appetite is at province of Ontario, province of Quebec, and federal government. And in an envelope of about $20 million, 12 million or so from the suppliers who are on it, 5 from the feds for essentially engineering integration, and then 1.8 from the province of Ontario and 1.4 from Quebec for matching funds on really R&D on the way all of these parts would be compatible with each other. We built our own car. We launched this vehicle at a consumer electronics show in Las Vegas to global coverage. Probably did 120 interviews in that first 3 weeks when the car came out. With lots of questions on what is it? Can I buy it? Why'd you do it? What is it? It's a rolling demonstration of Canadian capabilities. Can I buy it? Yeah, $20 million or best offer. We only made one. Why did you do it? Well, one of the people, actually during the reveal, we pulled the sheet. I have 200-300 people around us. We're doing the presentation. Somebody whispered to me, Carlos Tavares is here. Carlos Tavares is the global head of Stellantis. And he says he wants to talk to you. But we'll tell him I'm a little busy. And they're like, no, what's right now? Okay, so I hand the mic over to our CTO. I go behind the car. I'm talking to Carlos Tavares. Says, what is it? I run him through it. And he goes, ultimately, we had 534 companies bid on it, 244 that passed our due diligence of. Do you have scalable technology ready for the 2025 model year? And we picked 58 of them. So as I'm telling him, there's 58 companies, biggest industrial collaboration project in the history of Canadian automotive, all commercially ready. He says, well, don't they already sell to us? I said, probably 20 of them do. He goes, well, what about the other 38? I go, that's the point of the exercise. And as we worked through with his team, and as we scheduled to bring this vehicle to OEMs like Stellantis, purchasing engineering, locally, continentally, globally, we have a vehicle that is an extremely effective tool to demonstrate to Mercedes that if they needed a lightweighting solution in structural products, Meridian Technologies in London uses magnesium. It's on our V pillars and some of our main frontal structures. If you want graphite brake lines for lightweighting, effective lightweighting in new metals, Martin Rea from Vaughan does it. If you want everything from LiDAR to cybersecurity to battery technology to motors, everything, TM4, Cybeats, Nano Explorer, LetterTech, LetterTech not only did we build a zero emission vehicle, we built a level 3 autonomous vehicle. And our partner there is this great company out of Quebec called LetterTech. Hardware solutions, but also very importantly, that software profile that helps this car communicate with other cars and the infrastructure to enable auto drive. Great company out of Quebec, been a real big star for us as we go around the world and say, why is this important? Well, we're demonstrating that in Canada, if you choose to make your cars in Canada to other OEMs or source from Canada, we've got options in every single component class.
Nice. Is it possible, just as an aside afterwards, perhaps you can send a brochure or with details of you said there were 56 different suppliers?
58 final suppliers, but 244 that could have done it.
So I think, because in Canada, and we're going to talk now and we'll roll up our sleeves a little bit about what's going on. But, we only hear about the 3 majors in Canada, right? Starting with Magna, then Linamar, and less so with Martin Rea. But as you point out, there are literally hundreds of auto parts suppliers in Canada, right?
Yeah, definitely are. And there's big ones that you haven't really heard of because, the nature of the business is if I sell you a set of wheels, and you put them on, if I sell Hyundai wheels and they put them on, they're Hyundai wheels. They're not Fastco wheels from Longueuil, Quebec. If I sell you seats into your Porsche Macan, those are Porsche Macan seats. They're not seats from Woodbridge Group on Kipling Avenue.
Yes.
And, like that, Woodbridge Group, is a private company that probably has 65 factories around the world, and they're quietly headquartered here in Vaughan, Ontario.
making car seats.
Yeah, really the foam products that are in everything from seats to headliners to trunks. All of these companies were the ones that put up their hands during the pandemic when we said we were short of critical medical goods.
Correct.
How can we manufacture very quickly? I think something like 17 or 18 of them that were on Aero were making for 2 months all of the medical goods we needed, including ventilators, really showcasing the flexibility and the creativity of the Canadian manufacturing base.
All right, let's roll up our sleeves a bit here. We've seen lots of volatility this year in the auto sector. What are some of the key trends that are driving the uncertainty?
I mean, it's first of all, it's the same one that's been driving everybody nuts for the last couple of years: semiconductor shortage. And then when you get to a shortage, you're an OEM that can make 8 million cars this year, but you've got enough semiconductors for 7 million cars. Now, how do you prioritize? Well, I mean, you obviously prioritize on the vehicle programs that are going to be able to fuel that company most profitably. The flip side is that you also don't want to be in a scenario where you have to idle a plant for too long, or shut down a program, that may not be profitable but has the market share in that segment as you develop the next program. So the replacement for that program. So there's a real big juggling act. We know that if you shut down an operation for too long, you risk losing labor. That is an incredible shortage right now. And it's an incredible shortage everywhere, much less Canada. We're probably in better shape in Canada than anywhere in North America. And this is the toughest labor market we've ever had. So as we wait for these semiconductors to come back online, and we keep, every 6 months, I get the next 6 months, we're going to be back at full. Or, I think we're going to see something like full capacity back towards the end of this year. But if you had me on last year, probably would have said the same thing. We can only go by what the, companies like Texas Instruments are telling us is going to be their schedule. The other thing that is, we think affecting a lot of what a lot of production numbers is, we have a lot of companies now committing to electrification, in part because governments, all the major markets are saying, well, you must electrify. Here's the slope, and in that slope that comes pretty quick and steep, you got to change the programs over. As you're changing programs over, these are all big retoolings, but also big rethinkings of your supply chain. And they're all fighting for access to the raw materials, the critical minerals for batteries. They're all fighting for access to the key auxiliary materials, cathode, anodes, copper foil, that type of stuff. And then also trying not to get further ahead of the market predictions rather than the mandate restrictions. There's a gap between the actual market prediction where governments want us to be. So companies are in an anxious state. Car makers are in an anxious state, and it's affecting the whole supply chain.
It's interesting you're still mentioning semiconductors. I know in the last 2 times we had you on, during the beginning of the pandemic, as things were kind of all locked down, nothing was moving. And then last year you still had struggles with getting semiconductors. I thought that now things were moving along.
They're starting to, and some of the smarter OEMs, some of the OEMs that have better relationships with the semiconductors, like the Toyotas, have better plans. And then the OEMs that are overcommitting to supply are getting better access to it. But it isn't trickling down in the way that you would expect into the major sub-assemblies.
Who's suffering most here, and who's winning?
The Japanese are better off than the Americans. The Chinese obviously are better off than the Europeans. The Koreans are somewhere in the middle. And what you're seeing is Tesla hasn't had a problem, or they've managed their problem. You're seeing their volumes rise as on schedule. They're a major auto producer now. But as we start to blend in more of a mix of electrified vehicles, whether that's plug-in hybrid or electric vehicle, the per vehicle requirement for semiconductors is also going way up. So it isn't, hey, by the way, I need 5 per vehicle, and doing a simple math equations. Like, no, your plug-in hybrids need 10, and your electrics need 15. You know, and on that sliding scale, it's the prioritization. Whoever's doing that corporate strategy of, okay, where do they go? Which ones do we make? Which plants do we hold at, you know, 1 shift? Which ones do we go 2 shifts? Which markets do we do it in? It's people are earning their money right now. Whoever's doing that planning is earning their money.
Interesting. Let's dig into this labor situation, because you know, the labor supply shortage, we're hearing that that's happening at the tier 2 suppliers pretty significantly. What are some of the key, what is that having on sort of production runs? And it seems to be causing stoppages in tier 1s and OEM facilities. Can you talk us through that?
There's not a lot of, so yes, there's a lot of stress in tier 2s and tier 3s. Really disproportionately versus tier 1s and OEMs. A little bit for the compensation structure, that the difference in the compensation structure. If you're making $17, $20 an hour at a lower tier manufacturer, you are susceptible to other options that are available in service businesses, retail businesses, or other manufacturing enterprises that say, look, I'm short, here's 22. There's a little bit more of a barrier to an, you know, for an OEM employee that's making $35 an hour, you know. So what we're finding is there's a heavy reliance on temporary work, much heavier than normal. Usually it's around 10%, you know, flex. You know, in some scenarios that we've heard, especially as companies are going to launches, that number is as high as 20 to 30%. The last thing you want to do in this business is cause for a stoppage. Cause for a stoppage, right. One, you got to explain it. Cause for a stoppage twice, might as well put the tools on the flatbed, they're coming to pick it up. And so there's a lot of anxiety. And so part of it also is you've got this stopping and starting of production, different customers with different batches and different schedules. And you've got the pressure to hold on to staff, even if they're idle, and you've got to cover that. And there's a lot of balance sheets that are getting, you know, paper thin. You can see through them, in part because they're carrying overhead without that production, in the hopes that we're going to get back to a more stable production schedule, a more normal production schedule, sooner rather than later. A lot of the tier 2s and tier 3s are suffering in that regard. And they also lack they're also eating a whole bunch of the volatility in the raw materials prices. Where a Magna, a Monterey, or a Linamar has the leverage to push back, some of these, you know, 2-plant, 3-plant, single plant suppliers don't have that leverage. And while the bigger tier 1s can negotiate with the OEs, say, hey, by the way, I mean, you can push me here, but I got to supply you in your Mexican plant as well, and your European plant. The tier 2s and tier 3s are having to renegotiate or try to renegotiate with tier 1s that haven't been, you know, you're managing upward, you're managing downward. Guess who's going to get squeezed? That's the downward ones.
So we're seeing that. Could that lead to some consolidation in the industry here?
I think we're seeing that. I think it's obviously these are more private enterprises than anything else, but you're seeing a lot of the bigger players turning around and making more frequent offers, and we're seeing a lot of sole proprietors in the lower end, in the lower tiers, turning around saying, you know, unfortunately, this is my exit. And We're also seeing some of the bigger ones. We're seeing, companies like ABC Technologies on an aggressive acquisition path. We picked up Windsor Motor Group not too long ago. It's it would be an interesting time to be a larger tier one right now. If you could manage your OE relationships, which they seem to be doing, I would be very aggressive in the acquisition market.
Have the OEMs figured out their EV manufacturing strategies yet? Are they going to keep more in-house or outsource more components, maintain? It seems like they want to keep more in-house, but there's a big investment needed in equipment, retraining, lots of question marks there. And you saw that obviously in the Magna results of the early part of this year, them warning about the amount that they're going to have to invest to stay and keep up with the demands on the EV. So talk us through that.
It's interesting, we pretend it's a market-driven business, and sometimes it is. So you sit there and you say, okay, what do customers want? Well, they want pickup trucks with V8s, and $40,000-$50,000 with all the trimmings. And if you made just that, you'd sell 10 million a year in the US alone. But you've got governments who turn around and said, okay, look, from a climate perspective, what we need to do is we need to get out of those, and we need to get into EVs. And we won't dictate the technology. We're just going to call it, you must be in zero emission vehicles. But we're going to make that curve so steep and so quick that the only solution is EV right now. There's no hydrogen solution right now. The technology exists, but the infrastructure doesn't exist. On EVs, the technology for infrastructure exists, but it's not deployed. So now you're at an OEM and you're saying, okay, look, in Canada, I have to be at 20% zero emission vehicle sales by 2026. I've got to be at 100 by 2035. Now, here's a spoiler: we're not going to get there, but there's no offer right now. Then the EPA about 4 weeks ago said, well, you're going to be at around 67% in the US in 2032. So now, in this market-driven business where consumers have voted by buying pickup trucks and SUVs with torque, in the CAFE standard under the EPA, there's a different standard, a lower corporate average fuel economy for light trucks. It's always been a great way for these OEMs to sell bigger engines in them. And so now you've got a plan to be able to put stuff on the lot that people will buy versus put stuff on the lot that the government will allow you to sell without. In Canada, the penalty for not meeting that 20% is $20,000 per vehicle. So it's punitive. But I've said it publicly and I said it privately to the feds. Look, you should start handing out the penalties now, because they're not going to get there. And so now you're sitting at an OEM and all of them, everyone that's making cars here in Canada, has said, oh, this is our electrification schedule. But they're not; these aren't charities. They'll turn around and say, we think we're going to launch this product by 2026. Well, in these next 3 years, if the consumer demand isn't there to get to the 20% that the government is saying that we have to do you make cars that would otherwise be profitable without that penalty and fight the penalty? Or do you make cars that are unprofitable that won't sell unless you discount them, maybe for the equivalent of the penalty? That's why a lot of them are saying, we're going to do a lot of this internally. If you go to 20% by 2026 in North America, okay, that's 20% of 20 million sales. And so where are the 4 million batteries going to come from? I know that in St. Thomas, Volkswagen's going to have 1 million batteries a year in 2027, maybe. I know that in Windsor, Stellantis is going to have 400,000 batteries, maybe. Where the cell's going to come from? Well, the short answer is from China right now. So we live in a space, and Anthony, if this was easy, then my kids would be doing it. I have to do it right now while we train them. We live in a space where government is saying we need to clean the air, which I agree. I mean, I was in the solar utility solar power business before this. We've got to clean the air. We have a responsibility. We're going to lay that responsibility on the car makers. If you don't get there, you're going to get fined. We want you to make cars that you can't sell at a profit, but if you if you sell the ones that you sell at a profit, we're going to find you the profit. And by the way, you need to tell, you're publicly traded, you need to convince your shareholders to keep your job. We're in an extremely volatile position.
And part of the big problem, aside from, you mentioned batteries, there's also infrastructure, because on this show, I've had experts on building the infrastructure for the amount of electricity required and charging stations, etc. And many have told me, like, how is it possible? It's not going to happen. Like, we don't have the ability to give you the infrastructure so that we're going to get by 2035 to not be to everybody doing EV, right?
They're the ones telling you it's not going to happen, because it's not going to happen. They're telling you that, but nowhere in the legislation or in the regs under the legislation says, well, if you guys don't make it happen, we're going to fine you. Because who are they? They're a collection of an ecosystem of distribution, transmission companies, generators.
Right. Correct.
But in that legislation, we're going to fine the car companies if the consumer doesn't buy the product that we wanted to do it. We won't incent the consumer, and we won't tell the consumer what to buy. And this isn't a rant. It's just why I think the numbers 100% by 2035 is, it's a fairy tale wrapped in a fantasy. The number may be 35 or 40. We certainly are at a tipping point where investment in electric powertrains is where the money's going, and not in internal combustion. But we're old men, Anthony, but we're not that old. Over the next few decades, you should continue to have me back on as you do these in whatever format you do it. And
at least once a year.
Yeah, we'll say, okay, how many did we sell this year? And we just built one. We're demonstrating around the world we can do it. But the key in this business is somebody has to buy it.
Well, you have to make it at a price. Right. And at a volume that will satisfy the demand at a certain price. This is like an economics 101, which takes us to the point that one of the big stumbling blocks, and we see this with Tesla, right? Tesla's had to lower their price, and so, but now they're selling it and it's hurting their margins. We can have a whole separate discussion about Tesla. We have touched on them in the past, but it's a trend, right? Yes, you can actually buy today an F-150. It comes with, like, say, it's electronic. I don't know which of the guys that are actually going to want to buy it, but regardless, it's available. But the problem is the price.
Problem is the price, and is it a work truck? And the question is, at a certain price, even if it is a work truck, you're not going to buy it to do work. And Ford, let's take Ford for instance. Incredible corporate citizen from a American company committed to American production, makes two of the most iconic American products in the world: Mustang and F-150, highest selling vehicle in the U.S. and maybe most iconic, highest selling two-door vehicle. Yeah. So they went all in on aluminum. A big bet about 5-6 years ago, aluminum on F-150. Why? Look, let's lower the weight of this vehicle so that we can raise the miles per gallon that we get on it. That bet, there were a lot of people panning that bet. Who the hell is going to buy a work truck made of aluminum? And you had all those Chevrolet commercials with, our bed doesn't dent. And then Ford saying, well, this is aviation technology and lightweighting. We're doing our part. Then we turn around and say, hey, by the way, yeah, all that you're doing, actually, you got to go to zero emissions right now. So we took a massive bet on the redesign on aluminum. Took a massive bet on sourcing that aluminum. The president of the United States said, oh, if you want to source that aluminum from Canada, we're going to declare it a national security risk, and we're going to put Section 232 tariffs on it. So we just raise the price for aluminum everywhere. New guy comes in and says, we'll get rid of those tariffs. By the way, they got to be electric. Hey, you're Ford. You say, I can do those things, but I have to source batteries from China. And so I don't have a battery solution right now, but I have a battery partner named CATL, which is a Chinese partner that can help me make electric F-150s and Mustang Mach-E's to sell to the markets at the times that you want me to. And the US federal government, the Canadian government here said, we will not co-invest with you if you have a Chinese battery partner. So Ford had to now go and do a deal where they have the cattle technology and they're doing it under license, and they have to guarantee that it's them. Now, I get that. I understand all of that. You know, I mean, look, you've heard my position on where we are versus China, but you keep throwing fastballs behind and in front and over hitters. You could stand there and say, I'm going to take a walk and I'll take that base. But we'll play baseball at some point, put it across the plate. Let me give me a chance, right?
Well, at some point, what will the OEMs do? They'll just say, okay, fine, government, you build it, because I can't build this cars. And therefore we got all these employees. They're going to talk to you. You're going to say, we have all these auto workers. By the way, we're not going to be able to employ them.
Yeah, it's so we go back to my first point. Is this a market-driven enterprise, or is the Biden administration solution to what you just said was, okay, look, we're going to heavily invest in production. We're going to pay $45 a kilowatt hour for any battery made in the US. So it means I'll give you a rather massive subsidy, anywhere between $2,700 and $4,500 US times 1 million batteries a year. Really, that's a lot of money, man. And they go, don't worry about it. We'll just print it. The lowest estimates of what those types of investments in clean transportation will cost the U.S. Treasury is $369 billion over the 10 years of that Inflation Reduction Act. The reason I was late for this call was I was on air in a radio show here in Toronto where I got into an argument with the host who said to me, why would Canada keep signing up for these massive subsidies for the Stellantis plant in Windsor? Didn't we have a deal? And I said, yeah, we did have a deal. And the Americans saw the deal and they came up with a different deal. And we got to either decide we're in the business or not. And if we're not in the business, this is the biggest industry in Ontario, which is the biggest province in the country. And it's the biggest portion of advanced manufacturing, which is an even bigger umbrella. These are the types of industries that pay the bills. In a plant like that, they make 10 million, they make 400,000 batteries a year at $25,000, it's $10 billion in activity a year. Times 10 years, $100 billion. We have to either get used to the fact that to match the US on strategic investments, it's going to cost us $5 billion in future incremental tax abatement. Or tell me what else everybody else is going to do around here. And if you want to pay,
what are we going to do in this country? Who's going to pay the taxes, right?
So a guy gets into an argument with me and I said, look, he goes, I think your numbers are fanciful. And as a taxpayer, I'm upset. And I said, look, you can have your own. He goes, I am a conservative who's agreeing with a bunch of liberals that this is crazy. And I said, well, I'm a liberal agreeing with a bunch of conservatives who are doing the investments. I'll tell you that in the auto business, you might have other people on this show, but in the auto business, it's all math and science. I either make the battery, I either make the car, or I don't. Then we inventory them, we sell them, and we report those sales. There's no art. If you want to have an artist on this show, you should have called somebody else. You should call me. In the end, if you're not comfortable with the numbers, then there's no me. I'm not going to win you over. But I'm not sure what everybody's going to do around here to pay for the schools and the hospitals and the highways. Anyway,
if anybody has any questions, we're getting heated now. Please chime in there at the bottom, hover over the Q&A. Flavio, obviously in this transition, so if I can summarize quickly, you don't see it that we're going to get to the government's targets. You're not sure that we necessarily have the infrastructure, nor perhaps even the technology to build all the parts necessary to do so at scale profitably.
Right.
So that means that there's going to be lots of opportunities. There's going to be companies that today are this big that could be this big, and there's going to be other ones that are big, that are large, that perhaps are well positioned to take advantage. In your mind, where do you see the opportunities in whether that's in individual companies as well as certain technologies?
So on one hand, the transition from internal combustion to electric is going to mean much less components in the engine and transmission space. Similar processes, you know, you're casting metals to create internal combustion engines.
Yes.
And you're casting that to make motors. These companies that are currently contracted to do connecting rods, pistons, etc., to the companies that make the short blocks, that then supply the long blocks to you know the big automakers, especially the ones making trucks and SUVs. I think they're going to be in trouble if they don't win those new investments. And by the way, it's a bottleneck. So even if there are less, because there's less components, there might be 10 suppliers today, there would be 5 tomorrow. Some of those companies are cutting edge on metallurgical processes. They just may be on the wrong track with the wrong partner and lose that business. Those are consolidation opportunities, as I see them. On the other side, you know, the growth opportunities in on internal combustion engine, on electric vehicles. There's 2 streams. Number one is on the pure tech play. An internal combustion engine vehicle is a 40-volt platform. 100 kilowatt battery electric vehicle is an 800-volt platform. All those connected autonomous technologies are now fully enabled, and you know we represent dozens of companies that are making that transition in, whether they're telematics companies, intelligent cockpits. You know, the Knight Rider kit technologies are absolutely going to be deployed in every vehicle that you drive over the next 10, 20 years. And so anybody who's in that space, now you've got a new platform, and you've got a platform at scale. On the pure electric drive perspective here, the biggest bottleneck on the deployment of these vehicles beyond the price delta is how are you going to charge it? Anybody who's in that charger space who can deploy charger technology at a lower price, that finds the midway spot between me plugging it in at my house and me going to a supercharger, I think is going to make a lot of money. I think we've been talking to a couple of major gas station companies, let's call them that, okay, across this country, and we said, why don't we present together you as an option? The consumer behavior of the last 100 years or so is, I know where the gas station is on my way to work or home. I know I can fuel up in 5 minutes. Now, for me to buy an electric vehicle, I got to figure out where I'm going to plug in. Never mind if I live in an apartment. Where I'm going to plug in, how long it's going to be there. Can I find the 3 spots at work? But if a Petro-Canada was a partner, where with all this deployment of public capital and all this growth in the market of electric vehicle consumers, could Petro-Canada be a partner in the sense that Petro-Canada now investing in the charging infrastructure, what can you give me in an 8-minute stop? How many could you deploy? How quickly can you move that model so that I start to think, not in terms of range anxiety. Look, you just say, I'm going to buy a Volkswagen ID4 and I don't have to worry about where I charge it because every gas station here is now a charging station. We're not going to be able to charge. We don't have the technology yet to be able to charge a full charge in 5 minutes. But if you could do 30% of a charge or 60% of a charge in 8 to 10 minutes and show up and do that at what's now a gas station, anybody who can enable that type of technology is going to be a critical facilitator in the government's fantasy of 100% sales in 2035. The other thing is that we've got, I think we need to modernize, you know, I'm just talking about the province that we're in right now and how we deliver electricity. Right now, we're essentially a network of distribution companies that are local distribution companies. We don't allow customers to net meter. You know, we have this little opening where we say, well, if it's from renewable energy sources, you can net meter, you know, talk to somebody at the ISO on how that works. We start to imagine the electric vehicle fleet of private vehicles that are out there as a virtual power plant. Where if you have 250 cars, I'm a fleet manager, I have 250 cars, they're 100 kilowatts each, 25 megs of power storage that I have. If I can plan that fleet to be available to the IESO, I mean, through an algorithm, I'm not going to sit there with a pen and paper. Algorithms and technologies that enable the ISO to be able to draw 4% or 10% or 12% at times when it would help shave peak capacity or peak demand. There's an interesting place to be investing.
And as far as our major parts manufacturers here in Canada, which of those do you figure here are best positioned moving forward?
I think that a company like Linamar is going to be a real good example on aggressively winning OEM business in motor castings and in gear castings, and then being the ones that coordinate the restructuring of the supply chain. I think I would watch out for that. You know, Linda and Jim and Mark and that team over there has shown a kind of a visionary approach to diversifying what vehicles they make, you know, from and where they spend their money, from supplying on-road vehicles to the Skyjack business to the agricultural implements, and now of course in their fuel cell partnership with Ballard. I would watch out. There are some companies that, rather not name them, but the product that they're in, intake, exhaust, fuel delivery systems, you know, they've got to figure out how their core capacities in manipulating plastics and metals to make those products turn into something that becomes part of a module case or a battery tray or something. But they're not going to see their business disappear, but they may see the critical mass disappear, shrink so much that some of those big players will have to leave the market. There just won't be enough to feed them.
Yeah, because the parts that are going to be necessary are going to change, right?
Yeah,
so they're going to have to change what they do.
If you're still on a 50-50 market in 2035, it's not going to be able to support all of the intake exhaust fuel people. Some of them will be there. There'll be a lot of consolidation. Some of them will just disappear.
On the and I'm going to get to, got a good question that came in, but I just want to ask you this before I forget as well. The OEMs, they're all moving each in their own way to some EV.
Yeah.
Can you comment who do you think has the better strategy or the structure to make this actual reality from a supply and demand position?
Yeah, I'm going to go with a non-sexy pick, but it should be no surprise for people. It's Toyota. Toyota, a lot of the recent analysis is, oh, they've missed the CV wave. They've fallen behind. You know, the company of the Prius has fallen behind everybody else.
Yes.
The fact of the matter is, you know, I used to work for a developer that was a partner with Walmart, and we used to talk about Walmart. Look, if Walmart gets into produce, Walmart's going to be able to buy an apple for cheaper than Loblaws. Loblaws is going to be in trouble. And never mind all your smaller grocers. The Toyota production system has changed the automotive industry around the world over the last 30 years.
Yep.
The discipline in that structure, you know, once they switch to the right mix of electric in markets, to the degree that the market supports those purchases, we're going to stop talking about electric vehicles and we're just going to talk about vehicles. They're all going to be vehicles. If they're all electric, and what's the difference? And a company like Toyota, in the way they make their premium product, you know, a Lexus. They make Lexus RX 300 and NX 300 here in Ontario. We're very familiar with the product. It actually is the benchmark for our Project Arrow exercise. It's a perfect vehicle made in the #1 plant in the world with the #1 workforce, leading their segments both by price and by volume. I think a Toyota 5 years from now is going to be who you go to for advice on where the electric, what's possible in those markets. Other companies, there's a lot of great, like if you go to Yorkdale Shopping Center in Toronto, you can see a Rivian, you can see a Tesla, you can see a VinFast. I take people there and say, look, let's look at this product. This Rivian product is perfect. I mean, it's literally perfect. From an engineering standpoint, quality of materials, the panel gaps, perfect. But I mean, it it's $240,000. You go to Tesla Model S Plaid sitting there, and the panel gaps are incredible. But that's not why people are buying Teslas. How does it perform? Fantastic. Quality interior, you can't even compare it to Rivian. And then the Vietnamese are in the game. They got a cars designed by Pininfarina, Ferrari's traditional. Really? Yeah, you look at them; they're good-looking cars. They're also subsidized in part by aggressive state participation in that business. You can buy a VF6 for $63,000. It is the competitor to Tesla Model 3, and I tell you, as a product, I think it might be a little bit better. Is that company going to survive? I don't know. Is Rivian going to survive? I don't know. This is the most aerodynamic car in the market. It's a Mercedes S-Class, a real competitor in terms of the product itself, but it's got no brand equity. So if you're a Mercedes S-Class buyer, you're going to switch over to Rivian? You're going to wait for the Mercedes EQS? It's a lot of questions.
It's interesting, as I listen to this, I also think about the resemblance to the aerospace industry and the amount of government subsidies that take place and the consolidation that took place. Of course, today we have essentially two major aircraft manufacturers, and those are a conglomerate of lots of acquisitions and huge government subsidies that are actually to the point of creating almost warfare over the amount. And so that seems to be something that's bubbling up here, right?
Yeah, it's I think the auto business is starting to closely align with the aerospace industry in terms of government participation in the business. In China, all the companies are state-owned enterprises, very competitive product. One day Beijing decides that Nanjing Auto has to be folded into Shanghai Auto, and it's done.
It's done. Do you think that because of that and the amount of change, like obviously we were ahead of them to begin with, but now they've caught up, and I don't know, you could give us your view, but do you think that they're going to move past us and Europe?
They've passed us on electrification. That's the proportion of deployment, but also the technologies and getting the vertical integration to turn around and make the major components at a very material cost advantage. Now, they do a lot of that by skipping a lot of the other things that our values don't allow us to, and they also do it in a process that just moves quickly. They don't debate these things in the house, so to speak.
Yep.
And so we need to respond to them, and responding to them in the US, they think that responding to them is getting into industrial policy. They may be right, but for us, first of all, our market will never be more than, I love how people say, well, you got to diversify markets, we got to find other partners. You do not ship cars profitably across the Pacific or across the Atlantic. It doesn't happen. Right. The margins in this business are single-digit EBITDAs, so not going to happen. So if the US is our market, and our market has, they come up with a purchase incentive where they exclude Canadian cars, it's an existential threat. We walk through that. If they turn around and they say, well, we're going to heavily subsidize the production of batteries because we got to beat China, but it's only in the US, then if we don't respond to that, we're not in the business. Yep. We can have debates, healthy debates, of whether we should be in the automotive business. But if we're not in the automotive business, we're not in the aerospace business, we can't just all be in the construction business. Who's buying houses?
You got it.
I say to people, I gave this analogy. I said, look, Babe Ruth, the greatest player in the history of baseball, was sold by the Red Sox to the Yankees for $100,000. And the owner of the Red Sox said, this is the best value I'm going to get. This guy was a star. I'm going to sell it to the guys up the street who have a bigger payroll. And things have changed. And now you have guys who are jabronis who make, $500,000 US on their rookie salaries. And people say, adjusted for the cost of doing business, the Babe Ruth deal was massive. No, it isn't. If you do today's dollars on that 100,000, it's about $2 million. The nature of Major League Baseball is the cost structures have continued to increase over the decades. That if you want to compete, it's an incredibly super big, complicated business. yesterday's Mickey Mantle at 150,000 or Nolan Ryan at $1 million. Never going to happen again. And we've got to progress as a society to say, if you want to be in the big leagues, you pay big league franchise fees and you get big league returns. If you don't want to be in the big leagues, well, you're going to run into guys like me. We're going to say, if you don't want to be in the big leagues, go move to North Dakota. Go find a nice place to live in Eastern Europe. Go like everybody else to Costa Rica. But don't get in the way here, because I also expect free medicine. And free medicine is not free. It's the battery company that's generating the incremental activity of $10 billion a year that we're going to tax. That's going to pay for it.
Everything's so intertwined. Great question came in. It's kind of the corollary to everything that we've been talking about. Ahmad, thanks for your question here. So what's the probability that we get a change back in regulations? Obviously, we could get a new administration that doesn't like what we have, but at this point, with China leading, how much would any administration want to continue lagging? What happens?
So it's a good question. We've got a good analogy that we can use here. That the Obama government, together with the Harper government and the McGuinty government, bailed out. Those three governments bailed out General Motors and Chrysler in 2011. They said the corporate average fuel economy standard in 1975 when we launched it was 18 miles per gallon. To 2011, we only went up 50% to 27 miles per gallon. We're going to give you $40 billion. Are you insane? Sure, but we want you to go to 54.5 by 2025. And so you saw all kinds of different decisions, like that Ford one, to go into aluminum to meet that standard. And in the initial guidance from the EPA was, if you don't meet those standards, you can't sell cars. Not you can get fined, like BMW got fined in 2009, 31 million. They spread it, or they buy credits from a Tesla. You can't make cars. Well, then somebody said, well, then we won't make cars. I mean, you can't make cars and leave them on a lot as a penalty. And so the Trump government, which, I mean, there isn't a lot of good things to say about the Trump administration, but in the industry, we had said, well, we're going to get to like 46. And if you punish American automotive capacity while the Europeans don't and the Chinese don't, all you're going to do is you're going to fill that market share with imported product.
Right.
So what happens is stretch goal meets some reality in progressive in the next governments, and you've got to recast it. So as soon as they did that, California said, no, we got to go back over here, and we've made an alliance with 14 other with 14 states that or 22 states we think represent 40% of the market. We're going to go harder, and now CARB is fighting with the EPA in court, etc. What I think is going to happen when electrification is, we say we're going to go to 20% by 2026, and then we're going to go to 60 by 2030, and we're going to go to 100 by 2035. The actual curve is going to be here, somewhere in the middle. We're going to get to about 40% or so. And this is my advice to a CEO of an OEM who asked me, what do you think happens? I go, well, all of these governments around the world are all going to transition. There is a next president or next prime minister. And he or she is going to say, I didn't own that initiative, so I'm not going to own its failure. And we're not going to go backwards. We're going to refocus on what we're trying to do. We're trying to take CO2 out of the operation of the product and the company. And my advice is that by around 2028, 2029, when we're off the curve by half, these governments are going to go back to the companies. And whether you're a Ferrari that makes 11,000 cars a year or a Toyota that will be making 11 million cars a year, we're going to say to you, what's your enterprise footprint? Everything that you do, everything that you source, and the product that you make. And we're going to divide that by probably the denominator is the product that you make. And you'll have a carbon allowance. We know we're not going to go to zero emissions, 100% zero emission product, but none of the companies are zero emission in their operation. Right. So you focus on the carbon footprint of the enterprise and you try to drive it that way. In the end, in the air, as you test the carbon and you breathe it in, does it matter if it came from the tailpipe of that Honda Civic or from the Honda factory? One way or another, Honda's got control. If we can't do it here, do it here. I think that's where we're headed. I think that's where the smart money should head.
That's interesting. And so it's the full carbon emission, not just the product's emission when it's finished.
I'll tell you why that's important. Let me just add one thing for 10 seconds. The Chinese are going to lead us all in zero emissions at the tailpipe because they're going to compensate it. They're going to 4,000-year arc on ROI. They don't really care. While their factories are horrible, if we follow along with the Chinese and say, no, you have to have it, we're only going to test it at the tailpipe, we're going to lose, period. And isn't the point here to get ahead? Isn't the point here to actually reach that target on CO2? The Chinese aren't signing on for this thing. They don't care. They'll sell them.
Very interesting. Flavio, we like to ask all our guests 3 simple questions here. We'll just round it up. Your favorite book?
I'll tell you, favorite. Great Gatsby. I read it once a year. But
is that right?
You know what? There's something about that Gilded Age and
from way back at St. Mike's days.
Yeah, the complexity of those relationships, the way that book was written, and it's a short read. It's 220 pages or so, and so it's a nice one to just say, you know what? And maybe this says a lot more about me than the book, but you know, you read it and it's almost like you get lost in the story and you say, are there twists and turns? There are no twists and turns. I've read it 20 times. I know exactly how it's going to go, but it's it's so well written it relaxes me.
Okay.
This book, this one here, I met with this author while I was in DC, and it's really and this is an author who's lived in China, who's giving from inside of China perspective to American readers on what the objectives are for the Chinese in this global play for the balance of power. And it really strips down all the niceties and says, look, the Chinese culture is to beat the American spirit. And this is how they're doing it, investing in different places around the world, and then using that investment for leverage in places like the UN. And by the way, this is the psychology. If you're all expecting for the Chinese middle class to become prosperous one day and say, we want more democracy, actually the Chinese middle class is saying, we want to crush the Americans. And this book is sobering, and it's a hell of a read. And I had lunch with I had breakfast with the author who had just finished briefing the Pentagon, who we had brought up to Ottawa to brief cabinet. And I'm like, wow, you are not a fun guy to have a relaxing meal with, but what a challenge. Jonathan Ward.
I'm going to see, I'm going to reach, maybe you can introduce me to him. We'll get him on the show here. That'd be great.
It would be, I'll do that when we get off here.
All right. Flavio, your favorite podcast?
This one. I mean, there's nothing to talk about.
Obviously. And then my favorite meal, so I like to ask all my guests, a favorite breakfast and your favorite restaurant for breakfast.
Well, I make a mean omelet. I'm an artist. If I send you pictures now, you'd be shocked. But there's a place down the street here called the Dundas Street Grill, which is on Bloor, and where Bloor and Dundas meet out by Kipling here. That is such a neighborhood treat, but I think it's soon going to disappear. I think development is encroaching on it. So get the pea meal bacon sandwich in the morning, or the egg white omelets. It's a throwback. It's a great place to visit.
I love it. Thanks, as always, for your wisdom here, your insights. Thanks for sharing with everybody. I got our polling questions, so everybody can answer and tell everybody, and they can tell us what a great job you did and give us insights for our next show. So, Flavio,
2024. I'm ready.
All right, let's get together. Take care.
Ciao.
Ciao. All the best.